All right. So one of the issues we're discussing on the program today is hedging currency risks. So we have, and this has been the focus of a research firm which is based in London, Telima. We have one of them joining us now to tell us at this time when it seems like well, the currencies globally, we have COVID affecting currency, we have inflation affecting currencies. So we have him joining us now, the head of financial sector research of Telima, Rahul Shah, joining us to tell us their research and part of the impact or the lessons that we could learn from that. Good to speak to you, Mr. Shah. Good afternoon.
Good afternoon. Thanks for having me in.
Yeah, so your recent report looks at how investing in banks can help equity investors. What caught your interest? Why did you look at this topic in the first place?
Yeah, so I think two main reasons. Firstly, the dollar has been strengthening this year. It's up around 5% against a basket of currencies. And I think that strengthening trend is likely to continue as the US central bank reduces its bond purchases and also in turn starts to raise interest rates. So that's the first reason. The second reason is that we know from past experience that when bond markets become more volatile, that some emerging market currencies can get sold off. And I think we're entering such a period of volatility right now. So I think for international investors, particularly those that look at emerging markets, currencies are going to play a much bigger role in their investment performance going forward.
And what were some of the key findings of your research?
So we looked at around 91 banks in detail across 39 emerging markets, including 4 from Africa. And what we found was that in 2/3 of the cases, the banks are actually net long foreign currency. And this means that they can be used as partial hedges against currency weakness. So that's basically the key finding.
And then one of the names you singled out caught our attention here in Nigeria, Guarantee GT Code now, Guarantee Trust. Tell us a bit more about what you found out about that.
Yeah, so Nigerian banks are interesting because they do tend to be quite significantly net long foreign currency. And that's because one of the big sectors that they lend to is oil and gas. And that is a sector that has foreign currency earnings. So they tend to make dollar-based loans to that sector. What we've seen in the past is that when the Naira does weaken, the value of those loans in Naira terms actually rises. And provided the oil companies are able to service those loans, and unless there's an oil price crash, they should be able to. It means that the banks can record translation gains through their income statement. And among the banks that we looked at, GT was the most exposed to this phenomenon. And we know from GT's past results that when the currency has weakened in the past, they have been able to record these gains.
And which other market did you look at on the continent?
Sorry,
hello, Mr. Shah.
Hi.
So which other markets did you look at, apart from the markets in Nigeria? Which other markets on the continent caught your interest?
Okay. So in Africa, the other markets we looked at were Kenya, South Africa, and Egypt. The banks in those countries also tend to be net long, but to a lesser degree than Nigeria. But I think that those hedges could actually be just as important because, for example, if we look at the Egyptian pound or the Kenyan shilling, and we look at the fundamentals in those countries, there are a few sort of red flags, such as current account deficits, inflation, and an effective exchange rate. So those hedges could actually be more meaningful in some of those other African countries. But I think the key takeaway from the research that we've done is that if you are interested in investing in Africa, but you are worried about currency risk, then do consider the banking sector as a means to getting that African exposure.
All right. Thank you so much, Rahul Shah, head of financial sector research at Telima. Enjoy the rest of your day.
Thank you.
So it begins tomorrow, and the discussion on financing Africa's post-COVID-19 development will be the talk of the town at Cape Verde. But we'll have that discussion after the break. Just stay with us. It's Business Incorporated on Channels Television.